Well, let's get more on macro, particularly those currency moves. Luca Santos joining us from ACY Securities. Luca, welcome on this Friday.
Good morning. Freezing Friday.
Well, if you're in Sydney, it is happens to be cold in the depths of winter. A different story in Europe at the height of summer, where there's a focus at the moment, obviously, the ECB, leaving rates on hold as expected, but also at the same time, there's that focus on a prospective trade deal with the US.
With US, yeah. I guess when we look to Europe, in my opinion, is one of the best countries for you to put your money at the moment. So we have inflation at the target, on the medium-term target at 2%. I think, if I'm not wrong, is the fourth lowest inflation around the world. You know, even US has a higher inflation than Europe at the moment. Australia has a higher inflation than Europe at the moment as well. So I think the ECB positioned themselves pretty good ahead of the whole inflation in 2022 and 2023. Everyone was expecting that there was going to be a tragedy happening onto the economy or something like that with Europe. Inflation was high at 10% in 2022 and now lowered to 2% into the medium-term target. So yes, widely expected, maintain the rates at 2.15%. I think it was like 90% of the market was already expecting that to happen. And when we look to the whole Europe and just look at the first quarter of this year, we've seen that the economy grow much higher than what was expected. When we look to the servers, manufacture and services, they have been higher than expected as well. I guess, into my opinion, is due to the anticipating hike of the tariffs that they had into Europe. So therefore, the whole private investment, consumptions and manufacturers, they've acted ahead of that. So, it's like the inflation didn't happen because they acted ahead. So therefore gives more room to ECB to keep rates and change it and be data dependent on see how that will go further for the next few months that we got in 2025. That being said, now the trade deal between US and Europe has been going, I like to say that the trade deal with US and any other country has been going for ages now, because every time that there is 1 week before the deadline, some of the countries come, okay, we need more time, and then that's another extra month. So I don't even know how that's going to go for another 1 year, another 4 years. When we look for US and Trump, he did I think only 4 deals around the world. He needs to do another 152. So there's and that's already 1 year, and it's like that 360 days gone. So he doesn't have much more time. If he keeps doing like only 4 deals a year, it's going to take him ages. So back to ECB now. Whatever they do, in my opinion, won't change anything, because investors are looking at Europe at one of the best times to invest at the moment. If we look to euro against the US dollar, for instance, we see euro trading now close to 1.16, 1.17. There was a very muted reaction on the ECB release, widely expected, but my opinion is that euro dollar can come to 1.20 by end of the East 2025. It doesn't matter if they have a trade deal or they don't. I think investors are still looking at euro as a very sort of a safe haven currency at the moment, despite whatever is happening around the world.
Elsewhere, what are you seeing with the Aussie at the moment? So it did hit 66 again yesterday. It has come back a little, but where do you see that going at the moment, with, of course, the prospect that the RBA will get around to cutting rates again?
Well, a bit strange of what RBA has been doing, because they are expected another 3 cuts and they have only a few meetings. So I'm not too sure if they're actually going to cut, consecutively 3 cuts. That's going to be a pretty interesting scenario to see. But Aussie dollar has been the risk-on currency as has always been. So whenever there is risk on, the market sort of buys Australian dollar. Whenever there's risk off, market sells Australian dollar. I still firmly believe on 68 by end of this year in Australian dollar. And I've been here 2 weeks ago and exactly say that we would be breaking above the 66, and that's exactly what happened. We break above that sort of consolidation, now trading at 65.90. Most likely going to 68 very, very soon. I still believe that majority of the flows are going to Europe, Australian dollar, and maybe Japanese yen into the next coming weeks and coming months, depending on what the BOJ, the Bank of Japan, will do with the interest rates and the Prime Minister as well.
Well, I mean, that's the other factor, isn't it? That the political uncertainty
100%.
in Japan, with the government having lost both houses.
Yes.
So, I mean, it looks like a foregone conclusion that the PM's actually going to have to go.
Well, he said that he would. He never did that before. So it's different from Trump asking the central bank, the Jerome Powell, to leave. He's not going to do that. But it's that the PM actually saying that he's going to leave. I think that it has a huge impact of uncertainty into the market, and that definitely drags into some chaotic places into Australia as well, in China and New Zealand. As you say, Australian dollar, New Zealand dollar, and now I guess the Japanese yen as well is more of a risk-on currency. In the past was Japanese yen as a risk off, and the carry trade was one of the best trades that you could ever have on your portfolio. I think that's unwinded now, and we have to see what's going to be the next series of the Prime Minister and the Bank of Japan into this year.